it looks like?
Sure. Thanks, Gabby. And I speak quickly, so if I'm speaking too quickly for translators, someone should wave their hands and let me know. I just thought what I do is, I think many people know there's an extraordinary energy revolution happening in the U.S. and just provide a little bit of context for exactly what's happening on the ground and what it means in different respects. It's hard, the phrase game changer gets used a lot. I don't think it's an overstatement to describe what's happened in the U.S. energy picture in the last 6 or 7 years as a game changer. I think when people look back and the next Dan Yergin writes the next book on energy history, they'll look at this moment in time, not just in the U.S., globally as well, for reasons we can talk about, but in the U.S. as one of the really fundamental, historic transformations in our energy outlook. U.S. oil production has nearly doubled in just the last 4 years, from 5 million barrels a day to 9 billion barrels a day. When you add in liquids and refinery gain and biofuels, we're the largest liquids producer in the world. Our import share has decreased from 60% to 25% of our consumption since 2008. So we're still a net importer of oil and probably will be as far as the eye can see, but it's much, much less. We're having a natural gas boom as well, as everyone knows. And the numbers coming out of many of the shale regions, in particular the Marcellus Shale, are just staggering and continue to surprise to the upside each and every month. If you look back at the U.S. government's annual energy outlook 9 years ago in 2005, and you look at their projections for U.S. natural gas imports, it was annual increases as far as the eye could see. All of that growth was coming in the form of very costly liquefied natural gas, and they predicted that that in 2020 the U.S. would be importing 18 billion cubic feet a day of natural gas. That's roughly twice what Qatar puts in the global market today. And in fact, the U.S. will soon be a net exporter of natural gas. The first LNG facility in the lower 48 from Cheniere at Sabine Pass will go into operation next year. And we have several more projects that are behind Cheniere that will come online soon. There was a kind of debate we had in the U.S. for several, 2 or 3 years about, I won't go through the whole export policy, but in order to export natural gas from the U.S. to countries with which we do not have a free trade agreement, the government needs to find it's in the national interest to do so. They gave one permit to Cheniere. Then we had a debate for about 2 years about whether that was in the national interest, what it would mean for U.S. manufacturing, what it would mean for jobs, what it would mean for the environment. And basically now the process has changed in ways I can go into if people are interested, such that if you're a viable commercial project, you can get financing, you can get your contracts in place, you're pretty much going to get your permit from the Department of Energy to export gas. And there are probably 4 or 5, 6 projects that I think are viable and really, may well get built and happen. They're obviously all multi-billion-dollar projects, and a low oil price environment changes the economics of those a little bit. Now we're having a debate in the U.S. about whether to export oil, and I can talk about that for a minute as well. There's a lot of question about the resilience of the U.S. energy boom, the break-even price of shale, particularly when we see oil prices drop in half. I think the consensus seems to be that wherever the oil price is, U.S. shale is economic, about $10 below that, and that keeps falling. So I think what's happened is we have about, for a variety of reasons, I think that even in a low price environment of $60 or $70, you will see growth in U.S. production slow, but you'll still see U.S. production grow. So the growth rate will come down a little bit. We're seeing sharp reductions in capital investment from the industry. Conoco just announced about a 20% cut in CapEx for next year. Most of the other companies are going to announce large reductions in capital investment. But even with less investment, you can still see U.S. production continue to grow. About 70% of U.S. production comes from just 30% of the wells, so companies can focus on the sweet spots. The productivity improvements that the industry is making are really extraordinary. The initial production, the decline rates, the time it takes to complete a well, these get better and better every month. And the U.S. Department of Energy has a really good monthly drilling report now that gives you all that data. And there's about 10,000 wells in the U.S. that have been partially drilled but not completed. They started just to hold the acreage, and people can go back and finish those now. So, at least for the next 6 months and beyond that, I think, even in a low oil price world, we'll still see U.S. production grow, which of course raises the question of where the barrels will come off the market to support prices if, in fact, the Saudis and the rest of OPEC, their mindset is we're not cutting, we're going to let the price fall and let high-cost producers cut. So the impact of this has been, it's been one of the brightest spots in the U.S. economy. It's added probably 0.5% to GDP over the last 2 or 3 years. It's a little bit, roughly equivalent to what some people estimate the U.S. stimulus package did to boost the economy after President Obama put it in place in 2009. Geopolitically, as you heard, the U.S. is more energy secure today than we were a decade or two ago. We're importing much less. Obviously, import might not be the right metric because oil is still priced in the global market, but our trade balance is better. I think the fact that we were able to get many nations like China and India around the world to actually reduce their purchases of Iranian oil so that the sanctions against Iran had more teeth than many people thought they would was aided by the fact that the U.S. alone more than made up the lost supply. It's played a really important role in our trade negotiations with the EU and with the Asian countries and the TPP, the Trans-Pacific Partnership. And then environmentally, U.S. greenhouse gas emissions are down about 10% since 2005. Mostly because of an economic downturn. I think the second factor would be because of switching from coal to gas as a result of very cheap natural gas prices. It is important to remember that last year greenhouse gas emissions in the U.S. went up. Coal regained market share because natural gas prices went up from an artificial low of $2 where they were never really viable to stay. So it has been a help in some respects, but it's the idea that somehow shale gas has, solved the climate problem, which you hear sometimes is overstated. It's still not. We still need very strong climate policy, and I think with cheap gas helps lower the cost of implementing that climate policy. But we still need that policy. And then there are some trade-offs with regard to this very large infrastructure investments we make in gas and the long-term trajectory for emissions that I know my colleague Michael Gerard will talk about. So I think I'm at 8 minutes. That's a little bit of an overview of what's happening in the U.S. And I would just note that, so I mentioned exports. There's a host of policy implications that now the Obama administration is dealing with that really would have seemed unimaginable just 5 or 6 years ago, like whether the U.S. should export energy, or is it safe to move oil by the greatest innovation of the 19th century, locomotive? How should we think about our strategic petroleum reserves and what the right size is and what the right usage is? Can we get the SPR oil into the market because we've seen such a shift in the U.S. pipeline infrastructure, which was built to take oil from the Gulf Coast and bring it up into the country, and now it needs to be flipped on its head. So there's a bunch of policy issues associated with this energy abundance that the U.S. administration is kind of grappling with, and that's what we spend a lot of our time thinking about at the center. So thank you.